Welcome to the world of Ethereum. So, what exactly is Ethereum and why is it such a big deal? Ethereum is much more than just a cryptocurrency. It's a decentralized platform that allows developers to build smart contracts and decentralized applications, dApps, on top of its blockchain. These applications are not controlled by any central authority, making them decentralized and opening up a wide range of possibilities, from finance to gaming. Ethereum's native cryptocurrency is Ether, ETH, which is used to power the network. Every time someone executes a transaction or interacts with a smart contract, they need to pay a small fee in ETH. This fee is also known as gas. Ethereum was launched in 2015 by a team led by Vitalik Buterin, and it has grown to become one of the most important platforms in the blockchain space. Ethereum is essentially a global decentralized computer where applications can run without any downtime, fraud, or interference from a middleman. Ethereum mining has been crucial to the network's security and functionality. In proof of work, POW, miners use powerful computers to solve complex puzzles, which help verify and add transactions to the blockchain. In return, miners are rewarded with new Ether ETH coins. Ethereum mining differs from Bitcoin's in speed. While Bitcoin blocks are mined every 10 minutes, Ethereum blocks are mined every 12 to 15 seconds, which allows for faster transactions. However, Ethereum is transitioning away from this energy-intensive process. With Ethereum 2.0, the network is moving to a proof-of-stake (POS) model. This transition will eliminate the need for mining and instead allow users to validate transactions by staking their Ether. This shift aims to make Ethereum more energy efficient and scalable, ultimately reducing fees and increasing network performance. Bitcoin and Ethereum are both major players in the cryptocurrency world. Their purposes are very different. Bitcoin is primarily designed as a digital store of value or digital gold. Its main goal is to provide a decentralized currency that can be used for peer-to-peer transactions and as an asset to hold. Ethereum, on the other hand, is a programmable blockchain platform that allows developers to build decentralized applications on top of it. This makes Ethereum far more flexible, as it enables the creation of smart contracts, which are self-executing contracts with the terms directly written into code. Another key difference is that Ethereum's blockchain is transitioning to proof-of-stake with Ethereum 2.0, making it more energy efficient and scalable than Bitcoin's proof-of-work system. These innovations make Ethereum a more versatile tool for developers looking to build decentralized solutions beyond digital. Ethereum is the foundation of DeFi, decentralized finance. But what is DeFi, and why is Ethereum so important to it? DeFi is essentially the process of recreating traditional financial systems like lending, borrowing, and staking on a decentralized blockchain without banks or middlemen. For example, on Ethereum, users can borrow and lend assets using smart contracts. These smart contracts act as automated agreements between parties, ensuring trust without the need for a central authority. This opens up global financial services to anyone with internet access. In DeFi, staking has become a popular way for Ethereum holders to earn rewards. Users can lock up their Ether in DeFi protocols, providing liquidity or helping validate transactions, and earn interest or tokens in return. Ethereum's programmability and smart contracts have made it possible to build complex financial systems, completely changing how people interact with money. From decentralized exchanges to lending platforms, Ethereum powers the core of DeFi. One of Ethereum's biggest challenges has been the cost of transactions, known as gas fees. During times of high demand, gas fees can spike, making Ethereum expensive to use, especially for small transactions. To tackle this issue, Layer 2 solutions have been developed. Layer 2 solutions like Optimism, Arbitrum, and Polygon work by offloading some of the work from Ethereum's main blockchain, allowing for faster and cheaper transactions. These Layer 2 networks run on top of Ethereum, still benefiting from its security, but improving scalability by reducing congestion on the main network. This is a critical development because it allows Ethereum to handle more users and transactions without facing network slowdowns and high fees. These solutions are making Ethereum more scalable and user-friendly, ensuring its continued dominance in the decentralized space. One of the biggest questions in crypto is whether Ethereum's price can ever catch up to Bitcoin's. While both are major players in the digital currency world, their economic models and overall roles are very different, which has a direct impact on their prices. Let's start with supply. Bitcoin is famously capped at 21 million coins. This limited supply is one of the key reasons why Bitcoin is often referred to as digital gold. The scarcity created by this cap, combined with increasing demand, drives Bitcoin's price up over time. Once all 21 million Bitcoins are mined, expected around 2140, no new Bitcoin will enter the market. Ethereum, on the other hand, doesn't have a fixed supply. As of 2024, there are around 120 million Ether in circulation, and more ETH is created through the staking process in Ethereum's proof-of-stake model. However, Ethereum has implemented measures to control inflation. With EIP 1559, a portion of every transaction fee is burned, removing some ETH from circulation. This burning mechanism, combined with staking rewards, helps manage Ethereum's supply, but it doesn't create the same scarcity as Bitcoin. Ethereum has made its way into traditional financial markets through ETFs, exchange-traded funds. An Ethereum ETF allows investors to buy shares that represent Ethereum without directly holding the cryptocurrency themselves. This makes investing in Ethereum easier for those unfamiliar with managing digital assets like wallets and private keys. As Ethereum ETFs become more widely accepted by regulators, the market becomes more accessible to mainstream investors. This could drive increased adoption and push Ethereum's value higher as more people see it as a legitimate investment. Looking ahead, Ethereum's future looks promising. With the ongoing Ethereum 2.0 upgrades, the rise of Layer 2 solutions, and increasing institutional interest through ETFs, Ethereum is positioning itself for massive growth. These developments make Ethereum one of the most important assets in the cryptocurrency world, not just as a currency, but as the foundation of decentralized applications and the future of finance.